But here, the idea is that the large range day will usually occur after the small inside day. Whenever there's a small inside day, it's either the very next day or worst case scenario, the second day after. Well, you can't do that here on Friday because we don't trade on Saturday. So what are they going to do? They're going to rush. They're going to rush right at the opening bell. And you see that happening here. The open is the low of the day thus far. So what are they doing? They're rushing to get the market up here. Who is they? The algorithm. It's just simply running really, really quick to get to that level here because it doesn't want to offer the opportunity for any individuals that have their stops up there that have been holding short, looking for Wednesday's continuation on Thursday, but didn't happen. And then Friday, here it is. They run real quick for them. That sudden one directional run is going after that liquidity. So they can't pull their orders. The direction is going to be bullish, as I indicated on Thursday's tweets. I told you to focus where the market's smooth. And one of the things I learned from Larry Williams is on large range days, if it's bullish, the open is going to be very, very low on the daily range. Okay. And I know that it's going to be in the lower quarter of whatever the daily range would be. So let's do some math on that a little bit, rough math. If we know we're opening at 9:30 and we're going to view this, it's not technically the daily open, but I look at sessions the same way I would look at a daily candlestick. For me, the morning session, the high and the low, where we start and where we stop, I look at it in this perspective. This is power 3. So I'm looking for the opening when I'm bullish, and I want to see manipulation. That's the drop down, because if I'm bullish, I want to see some opposing direction. That's the Judas swing. That's manipulation. And then the accumulation below the opening price or just above it, when it comes back down and touch it again, it does not need to come back and touch it. But if it does, that's all part of the accumulation phase. And then you have the profit release portion of the run. Then you go to the target, which would be the liquidity or some higher time frame PD array. That's these two levels here. So the market trades up into them. And again, these levels, this is not to scale, but it's just the idea of Thursday was a small range inside day. And then Friday, bullish. The open's going to be near the low of the day. It's actually the low of the day here if we're looking at the morning session. But if you look at it through the lens of overnight and at midnight, there's midnight. It creates the opening here. Look at that like this. There's your opening price. Here's the low of the day right there. So this line right here, think about this crude depiction of a hypothetical daily candlestick, open, high, low, and close bar. That opening price is this. This drop down is this little tail that's making the low of the day. And then the market trades higher. It doesn't always, but it can come back and use that same opening price. What is it doing there? Trading right to that opening price. Hits it. Then it consolidates. What's it doing? It's accumulating. It's accumulating all around that opening price. It creates the first drop down. That's where smart money is going to buy. I spent my first few years trying to decipher this mystery because that was the weakness that Larry Williams admitted at the time. When I was studying everything he ever had, he said that he wished he knew the zip code of all the traders that would knew how to buy below the opening price. Okay, that was like a facetious statement that, he admitted his weakness. So he would always do what? He would be buying some portion of the previous range or an average of average daily range and take 20% of that range and add it to the opening price. And then he'd be buying up here. The point is when you have a large range day expected, Larry brought a really amazing observation that I didn't notice. And I was looking at charts a lot before him, not before him, but before getting into his material. I never noticed that the opening would be near the low of bullish days. It was just completely, I didn't know about it. I didn't pay attention to it. They never drew my attention to it. No one ever called any special attention to it. But because his material talked about that, I was like, wow, you know, as a day trader, like that's a superpower. Like that's literally like one of the wonderful advantages if you're a short-term trader or a day trader. You want to try to focus in on days when it's likely to start a price run like this, where everything is in your favor, that it's going to go one direction, find the opening price at midnight, and then anything below that price as it drops down, if it agrees with other factors that would constitute a trade, then it goes without saying that you have a high probability that you're going to be entering below the opening price, where and when smart money would accumulate their long positions. And just know, if we have an economic counter like we had this morning, we had 8:30, two news drivers, and I don't recall off the top of my head what they were. Give me a second. I don't want to say something that wasn't accurate. 8:30, we had core durable goods orders. And again, that's a medium impact news driver. You can find this information on forexfactory.com's calendar or Econo Day. And they're both free resources. But then we had another news driver at 10 o'clock. So we had a split. Notice that? We had 8:30 news, and then we had 10 o'clock news. So you got to be real careful on days that have that split news delivery, because sometimes it can create like a catapult type move where, or whiplash, where it sends the market one direction, not the data, but the algorithm will use that data and trip traders up, and they'll use the first set of data at 8:30, kind of like a FOMC where the first run is the fake run, and then at 2:30 during the conference at FOMC, the real run takes place, and it's much larger in the opposite direction. Well, sometimes when you have split delivery on the economic calendar, 8:30 and 10 o'clock news like that, it can create those scenarios. But you can filter that out on days and circumstances like today, where we had the bias was bullish. I shared that with you yesterday on Twitter. I said keep your eyes on focused on the smooth highs. That's your bias. That's me point. Look up. In other words, don't go short. Look up. And when we're looking for the last trading day of the week to go for that target or these targets that we had outlined here, that means that they're going to use the opening bell. And even though there might be a large gap here, even though that there's a 70% likelihood that it trades the mid gap, these are the circumstances and these are the types of days where it's going to say, not today, not today. So it's in a hurry, it's a rush to get up there and get to that information there. If we knew that the 10:30 to 11:30 hour, that usually creates the intermediate term higher low of the morning session, and then it invites the lunch macro to define where the order flow is going to be during that 2-hour period between 11 o'clock and 1 o'clock, or specifically 11:30 to 1:30. Okay, so lunch for New York is between 11:30 a.m. Eastern Time to 1:30 p.m. Eastern Time. The way that would unfold here is, let's just say, play devil's advocate for a moment. I'm going to be with you till 10:45. Okay, so that way we know what's going on. But at 10:30, let's say it is 10:30 right now. It's not. We have 11 minutes or so to go. What would happen is it would start computing, computing, computing. I was going to say computating. We'll say that the algorithm will computate the range high and the range low, and then it'll define where midpoint is, or equilibrium, and then below that equilibrium price point at 10:30, then it'll start looking for sell side. And the lunch macro is always going to run on those that are profitable. That's what it does. Okay, that's exactly what it does.